Welcome everybody, episode 54 of Martinis with Scott here on April Fool's Day, and this is no fool, no joke. CannTrust Holdings seeks bankruptcy protection. Yesterday, CCAA filing in Canada for you US or international folks. CCAA, Companies Creditor Arrangement Act, is a Company Creditors Arrangement Act. Is very similar to Chapter 11 in the U.S., so it's seeking bankruptcy protection, asking for the court to help restructure the company. Now, I'm going to, first of all, this is going to be fun to talk about this and not talk about COVID-19 today, because that's just been an ongoing depressing subject. And I'm going to spend this entire show working very hard not to say the words "I told you so." It'll be tough. It'll be very difficult for me to not say "I told you so" when it comes to the bankruptcy of CannTrust, but I'm going to give it a shot. And in all seriousness, this is not a very interesting story anymore. We covered CannTrust Holdings a lot in June, July, August 2019. In fact, into the fall and even into probably into January, we did a show or two, I don't recall, about CannTrust because it's a great story. An epic story of fraud and criminal behavior and terrible turnaround strategy and skills that we could learn a lot from, which is why we covered it on the Martinis with Scott channel. But now that it's gone bankrupt into bankruptcy protection, it unless you're in a insolvency walk, which I am a little bit, because I'm going to spend hours this evening reading about 300 pages of materials learning about the CannTrust filing and insolvency, because for me, it's not only interesting, I like the space, but there's a lot of things I can learn from doing that help my business. You know, there's CRO engagement letters, there's cash flow templates, there's how they structure administrative charges and all that sort of stuff, which, I'm not an insolvency lawyer, and we don't do insolvency work, although we use it as a tool. So I'm not on it day to day like the other accountants and the lawyers are and that sort of stuff. So good for me to read through this publicly available information and stay current. But for listeners, it's probably not a very interesting story to learn from about winning at business at this point, now that they filed for insolvency. But there's no way we can't cover the depth of this thing on Martinis with Scott, because we spent so much time following the fascinating downward journey of CannTrust. And so just to close off the loop on this for now, unless something interesting happens, we'll do another show on it. To close off the loop, I just thought I'd do this quick show today. So for those of you that haven't followed the CannTrust story, have no idea what I'm talking about, just go back and research it. Look at some past shows on Martini with Scott. You can go and find that. It's a cannabis company in Canada where they have the greatest shareholder value from the greatest industry from a shareholder value perspective compared to the US, for example, or anywhere else in the world. So it's what they call an LP, a licensed producer of cannabis with a greenhouse. Had over $1 billion market cap, and in July, August, I think early July 2019, Health Canada, the sole regulator for the licensing of legal, medical, and recreational cannabis in Canada, suspended their license or put them on hold initially because it was discovered there was an illegal grow of cannabis. And there was a whistleblower that brought this to their attention. They were accused, and I think it's just admitted fact at this point, that they literally built a false wall so that when the regulators came in and did their audit, they wouldn't see that. And then behind that was a bunch of cannabis plants growing, and then it was blamed on a couple of people at the company, and the rest of the company said, "Hey, not me. Wasn't me. I don't like Shaggy. Wasn't me. I don't know anything about this." And so over $1 billion of market cap, I think it's safe to say, is pretty much zero today. Multiple class action suits they had. When this came out, they had really just listed on the New York Stock Exchange. They did a bunch of raise of capital. So there's all sorts of class action suits from shareholders in both Canada, in the U.S., securities investigations, police criminal investigations, It turns out that the executives and the chairman, I think the CEO and chairman, don't hold me to this, but I think the CEO and chairman of the company, not only, this came out in July 2019, but they knew about it last October, November, December 2018, and just continued on with it. But they traded away a bunch of stock when the prices were high at like $5, $7. I forget what the numbers were. You can go back and check that for me. And, of course, today we're 90 cents, except we're cease traded and we're worth zero. So there was a bunch of insider trading based on that knowledge. All of the revenue went to zero because, it was a legal product and that affects their distribution channels, right? So that's all sort of happened in July, August, a little bit into the fall of 2019. And we did a show on it because I'm heavy into the cannabis space. There's a lot of interest. You guys want to hear about the cannabis space. Sinclair Range has a decent footprint in that space. I'm in fact president of the U.S. on the hemp processing side. And I've done a bunch of work in Canada, of course, in cannabis as well. So I know the space, and I'm an expert in companies in transition and high growth, how to grow a company, and how to do a turnaround. And as you know, on this channel, on these shows, I talk about that a lot. And CannTrust was just the most glaring example of what not to do that we could draw lots of lessons from and talk about. So that's what we did, and a couple of things that we decided not to do in a crisis. Don't forget, this is COVID-19 time. We're in a crisis. I've been shooting shows every day. Doesn't always come on Martinis with Scott. We do some other shows on Instagram for Roofers World. I have a written blog on SinclairRange.com that kicks into my LinkedIn. You can go check that out there. So every day I'm putting out content, and a couple times, 3 times a week that gets on Martinis with Scott, and I'm talking about the COVID crisis, the things that you can do in a crisis, and the importance of maintaining momentum. Well, CannTrust was in a crisis and they did nothing to kickstart momentum. They came out with a message repeatedly to this day. It's in the filings, in the CCAA filings. It doesn't say they have a plan, and here's what it is. It says we're planning to make a plan, right? And they just continue to say that for 9 months to a year now. They've never really established or acknowledged the extent of the problem, of the shit that they're in. And, they used to say things in their press releases like, well, we need to train our people better, as if training people better and having better compliance guidelines would stop people from building a false wall and growing illegal plants behind that false wall so that they can, avoid the regulators, grow more product than they're supposed to, and increase their revenue and trade insider shares based on the increased shareholder value. It's not training that's going to put a stop to that. It's integrity. Anyways, what else did they do on the turnaround? They didn't get rid of the bad guys. They fired the CEO and the chairman, maybe somebody else, a couple of people resigned, but the entire board of directors, apart from the chairman and the CEO, who I think was on the board, the entire board of directors remained. In fact, one of them took over as the interim CEO to do the turnaround, right? And these were people that were there when the alleged crime, or at least the illegal grow for sure, happened. They had one greenhouse. Like, it's not like these directors didn't know about it. And if they didn't know about it, it's because they didn't drive an hour and a half down the highway to where the greenhouse was and check it out. So they should have cleaned house. They didn't. Instead, what did they do is they sat around and sucked fees and cash out of this company because it had a bunch of money before, and now it has a lot less. I think as the time of the filing, I'll get to it down below, but 135 million or something, and I forget what they had before, maybe 160 million or 200 million, somewhere in that range, a lot more. And of course, what directors and key executives do in these situations is they say, oh my goodness, we're at risk. We need a bunch of more money to go into our pocket while we sit around and do nothing for shareholders. And all the cash of companies like this just gets sucked out. That's not necessarily a CannTrust comment because I haven't gone back to do the math and to reconcile that. But that's what happens in most of these situations, a lot of these situations. And if I were to go back and do the math on this one, I'd be shocked, completely shocked, if that's not what was going on here. And I'll talk about that a bit more in a minute. So we did these shows and we talked about what not to do to turn around, and I gave you a bunch of predictions because I think it's important to know that you can review companies and invest in companies and run your own company and learn from these lessons that you can that management matters and momentum matters and positivity matters, and positivity is not just hey I'm positive. Positivity is working towards your aim every day, even while all these fires are going around you. And we've shot a couple of shows on that, and I'll just, as long as I'm creating this content for you, I'll be talking about momentum, and I'll be talking about positivity and direction, positive direction as the key to managing a business through a transition. So here are a bunch of predictions that I gave you just off the top of my head. I haven't gone back to audit these, but I know for a fact that these were some of the predictions that I gave you. And I said, number one, these are in no particular order, but one prediction I gave you was that this idea of that they set up a special committee and hired an investment banker to review strategic alternatives was complete BS, because there were no strategic alternatives. It was smoke and mirrors, and it remains smoke and mirrors and BS today. It's right in their filing that they just want more time to review their strategic alternatives. It's been 9 months. And, it could have taken maybe an hour to figure out what the alternatives are. That was just always a complete BS. Sorry, let me turn the volume off on that. A complete BS statement and an illusion to make you think something was going on. I predicted that management will never regain its credibility because they're not coming clean. It feels like a month ago, like 4 weeks ago, maybe 6 weeks ago, they told us they would finish or release their audited financial statements so that they're in compliance with their regulatory reporting, so that they're not delisted from the Toronto Stock Exchange or the New York Stock Exchange. They told us everything was going to happen. I predicted something different. I predicted there would be no financial statements. I'll talk about that in a second. But in terms of regaining credibility, it's just been lie after lie from this management team, and it's right in their filings today or yesterday that the applicants, that's CannTrust, have determined that directing further time or resources to securities reporting is not appropriate in the circumstances. They're just not going to do it. They're just not going to do it. Do you think they knew that 4 weeks ago or 6 weeks ago? Of course they did. They lied to shareholders. They don't have no credibility. I think that was a decent prediction. I told you there'd never be a plan to fix the problem because they don't have a turnaround leader. They had a plan to plan, but they never delivered a plan. They never delivered a direction. How do you have momentum and direction if you don't say, here's what I want to go? On the podcast, I'm doing the same thing I always do, holding my hands out so you can't see it. But you have an aim, you work towards it. And maybe tomorrow you say, you know what? Things are moving so quickly here, my aim is wrong. Well, you change your aim. And then you move towards that. But if you never have an aim, there's nowhere to go. And what this company did is it just simply told you over and over, they're working on a plan. They're reviewing their alternatives, their strategic review, and they never came up with a plan. Again, 9 months, over a year since they knew about the issue, and 9 months since they were caught by Health Canada. I predicted there would be no financial statements, so there was no way KPMG was going to sign off on audited statements. There was no way they were going to resign because they want a seat at the table, given the class action suits, and so this just wasn't going to happen. And that's turned out true. I predicted that Health Canada would not be rushing to reinstate their licenses. Why would they? In fact, I suggested that they might not respond at all. And, I don't know how to prove whether we were successful on that prediction or not. But the reality is the company submitted a bunch of materials, they claim, to Health Canada. We haven't heard the response out of that. And I wonder, is Health Canada going to grant a license to a company that just filed bankruptcy? Is liquidity and is liquidity and the health of the company going to have any influence at all on Health Canada's decision to issue or reissue a license? Probably, right? So I think we're looking pretty good that the license is not coming anytime soon. Even if Health Canada did reinstate the license, I predicted no one would care. other than retail investors. So my expectation, and we'll see if this ever happens, my expectation is you would have a small bump in the stock because people will get excited, but you just got to think about the reality of this industry. It's changed. When CannTrust had $1 billion market cap, there was already a hit in the industry, and now it's just gotten much, much worse. There's a gross oversupply of product. Why would anybody need CannTrust's product into the marketplace? I predicted that the company would go bankrupt. It filed yesterday. I predicted the stock would trend to zero. I openly told you I've been short on this thing since June, July. And so I would say on the surface that I'm looking pretty good on those predictions. So that being said, what's going to happen now? So bankruptcy protection of any form, whether that be Chapter 11, a CCAA in Canada, a notice of intent to file a proposal in Canada, any real form of bankruptcy protection, if you take a step back, is an effort by the company to go to the court and say, hey, judge, what I'd like you to do is put a stop to all of these fires going on. I've got battles all over the place. I got multiple negotiations, like maybe hundreds or thousands of simultaneous negotiations. I'm in different jurisdictions. I got to have a lawyer in this court, and that court, all over the place. And I just can't physically do it, and I can't afford to do it. So I want you to help me consolidate all of these battles into your courtroom, into one big war, and let us fight it out with your guidance. And let's see if we can maximize the value for every stakeholder in the capital stack. The regulators, the police, the health authorities, the secured creditors, if there are any, the unsecured creditors, the directors, the professionals, the contingent liabilities in the class action lawsuits. We all need to sort it out, okay? And that's what bankruptcy protection is. And it's going to take as long as it's going to take. And in this case, it's going to take a long time because there's a lot of class action suits that need to be sorted out as to who ranks where, who's going to lead that. There's just going to be a big sucking at the trough, as it were, on this company. And there's a lot of cash. Well, not a lot, but there's enough cash that it keeps everybody interested. Nobody wants to put a stop to it. They're going to keep fighting it out until they're done sucking it dry. That's what happens in these situations. You want a prediction? That's what it's going to be. It takes the value. So what bankruptcy protection does, it takes the value of the company, which in the case of CannTrust is the cash, right? They also have a greenhouse. They've got some other short-term investments. I have no idea what they are. I haven't spent a bunch of time analyzing this, but what they do have at the time of the filing is $134 million Canadian in cash. And what they're going to do with that cash is they're going to take it first, and they're going to pay it to the professionals that are doing the CCAA work. That's the lawyers and the accountants, the CRO. And they're going to take a charge and put money aside for the directors, right? Remember I told you the directors are sitting around taking pay out of this. I haven't gone back to look at it, but that's what happens on these files. So the professionals are budgeted in this filing for CannTrust at $3.5 million in fees for the first 3 months. So they file what's called a 13-week cash flow, which is basically 3 months. And in that, if you look at the professionals' fees related to the filing alone, not related to anything else, it comes out to it comes out to $3.5 million. I promise you that cash flow is light, that magically these professional fees are going to be a lot more than that. In addition to the $3.5 million in professional fees in 3 months, don't forget, this thing's going to go on for 6 months, 9 months, a long time, okay, I expect. And so the professional fees will drag out, but that's the first 3 months. In addition to that, they have a $3.7 million or an expected $3.7 million charge for director fees. So these are your directors, and they want to be paid, and some other key employees. And so you set aside out of the cash that exists today $3.7 million for them. All right, so now we're well over $7 million out of your $134 million, and that only for the professionals only deals with 3 months worth of professional fees. So how long is your $134 million going to last at that rate? In the first 3 months, according to the 13-week cash flow, there's total expenditures out the door. By the way, there's no revenue. So every expenditure is just a one-for-one loss of cash of $22.7 million in the first 3 months of this alone. Okay, $22.7 million out of the $134 million that they have. If it drags on for 6-9 months and that expenditure just continues to escalate, how much cash are they going to have at the end of this? So those are the people that take the cash first. The remaining value goes to the other stakeholders in priority order. We've talked about priority capital stacks before, but the pecking order, as I put it. But I don't think, as I recall, there's no secured creditors in this company. I don't think there are. I think there was some PPSA registrations, Personal Property Security Act, so registration as to secured creditors. But I don't think they're all that material. The big deal is there's some $16 to $20 million, as I saw, of unsecured creditors. Being payables that are due, but there's $500 million in damages sought through these security class action suits. That's what this is about. This is about putting a stop to the class action suits and putting a stop to the regulatory fines that I expect everybody expects will be substantial on this thing as against the company, and having a court say, okay, let's work out just a number on this and how it's going to get paid and to whom. Okay, so after all that, that was the cash, by the way. And I talked about, I haven't talked yet about the greenhouse, and they have some other assets. I expect what will happen, and it's a very fluid situation, but they'll go through a sales process, sales, investment, solicitation process, which means they'll put together a package. They'll send out a bunch of packages to strategic parties, financial parties, and they'll say, hey, do you want to buy this thing? But of course, it's unlicensed, and you can't transfer the license. And so, how much is a greenhouse with good security systems, presumably in place, really worth? There's certainly no value without the license. There's even questionable value, even if it had a license these days. So, that's kind of a red herring. There's not much value that's going to come out of that, in my opinion. So, after all that, why I went through that whole discussion, is there anything left for shareholders? And on the Martinis with Scott show, we like to talk about shareholder value and how we improve that. If you're in trouble, to make it better. If you're an entrepreneur and you're looking for high growth, how to improve your shareholder value. That to me is always the metric. And the answer is not much. Not much, which is why I've been short on this thing for a long time now. What would the end result be? I think the likely end result is nothing. It just sucks all the money up and it heads into bankruptcy and winds up and never comes back. That's the end result. If you were a betting person, that's probably what you should bet on. If it were me, what would I try to do to save value for shareholders? Frankly, it would be a long shot, but I'd do what I told you ought to be done a couple of months ago, which is I'd seek bankruptcy protection, as they have done, to put a stop to all of this, because that's the only way to deal with those class action suits. I would seal it with that. I would take some of my limited funds. I would make an investment either before or right after, probably before. I'd have to talk to legal counsel about that, but I'd make an investment in the space, in branding or distribution, some area that needs cash where $5 or $10 million could go a long way and create a lot of value. And I would look for a private company, maybe do an RTO into this thing when it's cleaned. I would change the name, obviously. It'd basically start over. Your one asset, you have two assets. You understand the cannabis business, presumably, number one. And number two is you have some cash, which is pretty scarce in the cannabis business right now. So take advantage of those two assets. That's how you would create a turnaround plan. But it's a long shot. And it's a long shot because what happens in bankruptcy protection is all of these professionals start taking out their fees. Everybody has a different opinion. There's arguments and there's negotiations, and you end up with a compromise solution, which is what it's intended to be. But that compromise solution is never an aggressive, creative, what can we do best for shareholders type solution, because nobody wants to take that risk. So it's what I would do, but it's not probably what's going to happen in this situation. All right, let's talk about, since we're talking about shareholders, the stock for sure gets delisted by New York, gets delisted by the TSX. IROC has a cease trade on it right now. Now, I read somewhere that it's expected to be cease traded for good. I don't know if that's true. It might be true. I'm not necessarily an expert in that. I would have thought there's all sorts of stocks trading over the counter in the US and in Canada that do not have their filings up to date. So I don't know why this would be different. But maybe I'm wrong. I think it would be grossly unfair to retail shareholders if they couldn't trade out of this thing or make their bets, whatever they want to do. But we'll see. And if somebody could correct me on that, great. And if not, maybe I'm going to phone around and try and find out the exact answer on that. All right. That's all I'm going to do on CannTrust. I think we're done, unless something new and exciting happens here that I think is useful for the mandate of the show, which is to win at business. The momentum on this thing is over. The direction is over. Now you have to be an insolvency guy to really be interested in this. If you want to dig in further, go to the Ernst & Young Canadian website, or just Google CannTrust Ernst & Young. You'll find the Ernst & Young website. All of the CCAA court materials, like the affidavit, the factums, the court orders themselves, all of that is public information. It's on Ernst & Young site because they're the monitor on this thing. And in the factum already, and there'll be more like coming out probably next week. But in the factum already, you can see balance sheet information, although the company hasn't reported publicly in forever, a long time. You can get an idea of who their creditors are, who's secured, the story behind it. And just remember, it's a lot of paper, but a lot of it is boilerplate. And so when they list, for example, they blame COVID-19 as one of the reasons they have to seek bankruptcy protection, which, we know makes no sense whatsoever. So a lot of it is boilerplate just to get it out there in front of the courts. But there's a lot of information, a lot more than you've had before. And, you can rely on a lot of it. There's fog of war in this, right? When you first go into bankruptcy protection, there's all sorts of stuff flying around and nobody's quite sure what's going on, and that ends up in the paperwork. But you can follow along on the Ernst & Young website. It's a good thing to do. We're not going to cover it here, but good luck to you if you're looking to research into that. And if you have any questions about this, feel free to offline in the comments or email me, and I'm always interested in these things, so maybe I can help out. All right, I think that's it for today. Didn't intend to spend 27 minutes on this, but it turns out I did. Martinis with Scott, a show about winning at business, intended for entrepreneurs, business owners, managers, directors. Please, if you like the content, do us a favor and subscribe. We're on YouTube. You look up Martinis with Scott channel on YouTube, Apple Podcasts, Spotify, and thank you so much for listening.